Jay, I want to ask you a very important question. Are we becoming a semiconductor networking show? Hello, listeners. Welcome to another episode of The Circuit. I am Ben Beharan.
Greetings, programs. I'm Jay Goldberg.
He's a verklempt Jay Goldberg. I appreciate everybody sending me some messages about my kidney stone issue, and those of you who've had similar problems, we can all relate, empathetic to each other in the club. So that was nice. Appreciate that. We have a couple juicy topics, juicy nuanced topics today. Jay and I attended Marvell's Industry Analyst Day, which put this whole weird thing on Twitter where people were like, why isn't it being broadcast? I don't understand. And I had to remember people that my primarily job function, not Jay's, is not as a sell-side analyst. So other things that we go to while public and not NDA aren't always broadcast like they are when they're talking to the financial community. And we had Broadcom. But before I say that, Jay, I want to ask you a very important question, which I think people would. Are we becoming a semiconductor networking show? I say this tongue-in-cheek because it's now like, 50% of our topics has shifted from just core logic to now networking?
Yeah. I feel like this is the astronaut meme where the one astronaut is standing with a gun to the back of the other astronaut's head saying, it always has been.
Yes. Yes. I just find it, I think like as people who listen to this show, like realize, we, Jay and I, and many in our circles are obviously like ground floor to the conversation with the companies driving this industry. So our topics shift with some of the more dominant industry conversations. And not to say that logic and core compute and ASICs, which we'll talk about today, are not important, but that has relatively become, I don't want to say settled, but we've talked about it a lot. We're moving to other areas of the stack where there's just more questions, less uncertainty, more dynamics that necessitate this discussion because it is sort of like the way we're evolving too, like as we build core functions, right, of compute. So anyway, it's thematic and trendy, but my point was we talk a lot about networking now, which I find entertaining.
If you look at the cost of AI server, memory is a pretty significant piece of the BOM, right? Maybe more than the GPU.
Yeah. And there's a lot of fascinating dynamics about this, as we'll talk about, right? Like what's happening with custom base dies for HBM. What does that mean for next generation ASICs and GPUs and whatnot? But anyway, so let's do a couple things. Let's start with kind of our takes on Marvell from their Industry Analyst Day. And I would say, I've been to 5 of these, I think. I think they said 7. I didn't go to the first 2, but I've been to 5 of these. And, it's interesting to watch them sort of evolve. The first one I went to, semi-custom, was like a fraction of the conversation. And I remember picking up on it really early, going to them and saying, hey, guys, this is probably one of the most interesting parts of your business. And they're like, yeah, maybe, we're not sure. And gave them my whole, like, why Ben loves custom semiconductors or being vertical if you're a company, meaning designing your own semiconductors. But at that time, I it was a tiny bit of their business. And I said, look, how big do you think this could get? And management was like 25%. Here we are again, years past this, and that is still 25% of their revenue, like we talked about. And every one of these analyst days has gone through a little bit of a shift, right? If you think last year, I think it was, they talked about being an accelerated infrastructure company. Like Marvell is this. And, before of that, it was a little bit more like Marvell is a kind of custom XPU company, right, et cetera. So they've kind of like redefine or reposition themselves as each one of these. And this time it was a lot more of like Marvell is good, or Marvell does networking and IO, and that part of the periphery of the XPU is like where we're really good. So it wasn't just like whole XPU or the XPU, so the cores, the logic, the custom bit. It was all the things around that, which we loosely call XPU attach now, is kind of how everybody's talking to that. And while they're not, again, giving up on CPU designs or ASIC designs, they're sort of making it clear like this periphery, because of I/O, and again, like we said, in networking and where it's coming in optics, is really where they've got a lot of defensibility in IP, which I don't disagree with. Broadcom has that too, but I don't disagree with their kind of positioning there of, look at what we do in attach as kind of one of the critical points, and maybe even one of the critical points coming for next year. So that was I wouldn't want to say a pivot, but that was a kind of observation of just how they kind of positioned themselves this time prior to other years, where it was a lot more about the networking and the I/O.
So you, years ago, tried to convince them that they need to talk more about custom? Did I understand that right?
Many years ago, before custom was the trend, like when it was very tiny, it was
So-
the only thing I cared about. And
So I
they
can
were like,
blame you. I can blame you for this.
probably, especially as they started to get more customers and we're like, ooh, like this is fun. Anyway, but again, right, that was because my assumption is exactly what happened, which is that every hyperscaler or anybody who can design silicon will design their own silicon. And that theme remains true, and there's a handful of people who sit in the middle to help that happen, and Marvell's one of them.
Yeah. So this is always my dilemma with Marvell is the event was very interesting. They went in depth on a number of products. Fairly deep technical look at their entire networking stack, including a little preview for Celestial that they're acquiring. And like smart people, and they have immense capabilities inside Marvell. I like that. The problem is the broader story, and you kind of touched on this. Their message is sort of always moving. It's hard to keep track of, and I think that they have dug themselves into a little bit of a hole with this intense focus on custom silicon. And I have to wonder, like last year it was such a strong theme. Like we're a data center infrastructure company. That was the theme last year. And this year they moved away from that, and they were talking a lot about their network, just the networking side of things. I have to wonder if they're starting to realize that like being focused on custom is not a great is problematic. It's not a good necessarily the best way to tell the Marvell story.
Yeah, agreed. I mean, and I think right on the back of Celestial, who actually had a really good presentation, honestly, and sort of just on this kind of theme we've talked about before, where there's going to be a continued debate in the industry about how far Ethernet can go, how far active electric can go, how far different variations of copper can go, in which Marvell offered an entire product roadmap where they have all of those. But it's clear that the ability to cluster racks at any meaningful scale, meaning thousands upon thousands to tens of thousands, or as people say, someday you'll have 1 million of these, which would be kind of insane, because it would actually mean the vast majority of a data center infrastructure is one giant compute node. You are not doing that with electrical. You are doing that with fiber, either as small pods within a data center connected to another data center with small pods via fiber. But we're not there yet. Like we're still a ways away from the thresholds of fiber or from copper. But I think you can feel the tension of, if you're going to demand more compute and you want 10,000 racks of GPUs, not 1,000 racks of GPUs, to act as one giant compute cluster, you will be doing that with fiber, not copper. So I feel like they were just really trying to say, this is the trajectory, the industry trajectory from copper to fiber. We'll have both of these, but we're making investments in kind of this next new trend or this new wave in clustering racks together from a whole a multi-rack superpod cluster, which again, I don't disagree. That's a direction. So laying that foundation now, I don't think was harmful to kind of the way they wanted to present their story to us.
Yeah, and in fairness, it's an industry analyst event, not a big investor financial analyst event where they have to talk more about bigger picture strategy. So I think they're on the right track here. Networking is a big deal. Certainly, if you look at the way that AI systems are getting deployed, and they're just getting these giant worlds of GPUs that are interconnected. Google is, I forget, 6,000?
9,216 chips.
9,216 GPUs that are all essentially in one system. Nvidia is smaller, but already has a big number. Huawei talks a lot about this too.
Yeah.
Partly because they have to, because they need more chips to perform. But yeah, I mean that's the way this is headed, and I think where I get a little stuck here is optical is coming. It's going to be a much more important part of all of this. But I've been around optical networking for a long time, always sort of against my will. But it's always been there, and optical is hard, and it's really painful. The technology, the underlying technology, is super complicated and super fragile. Right? It's kind of a miracle it works at all. And so my rule of thumb is, my real rule of thumb is like just avoid optical because it's always going to end in tears. But more constructively, I would say that optical always takes longer than you want it to. And so I think we're going to have electrical interconnect, copper interconnect, keep in the majority of these systems for as long as it possibly can. And so it depends on your definition of timing. I think from where I sit, it's going to take a really, really, really long time before it's meaningful. From a someone's actually building these things, it's actually really soon. Like a 3-year roadmap, which is probably when it starts becoming real, is fairly soon if you're actually building these things.
Right. So yeah, and I think that's been like an interesting question. There was a report. I'm really not sure I believe it, but there was a report / rumor that Nvidia was trying to pull in some optical for Rubin. And even if that's true, I think what you have to realize, or at least reconcile with today, per the success of the Google TPUs, which are optically connected in some capacity, not every capacity, but enough that that's the reason why they can put 9,216 chips together as one cluster. It's very purpose built. Like you are fine tuning that solution together for that one customer or that one rack, right? From a merchant standpoint, it gets a little bit hard, which is why I think you'll see it come in flavors of custom, and it might not be full fiber. It'll just be portions that are fiber as they work out those kinks, but it is very, very specialized to that customer, which is why Nvidia, might be the next person who can do it sooner than later.
Oh, I mean, Google is Google's an extreme case. I think it's hard to benchmark against them because what Google has is an all-optical network, which is immensely complicated. Like they're not actually passing any signals around for most of their networking, for most of the chip-to-chip communications. It's all done on optical. There's no electrical signaling, and it's really, really hard to do that. Most systems today, you have an electrical signal, you translate it to optical to send it someplace else, and you translate it back to electric. And you have to do that along the route, right, to make sure it gets where it needs to go. Every time it goes, optical goes into a switch, and it gets transferred. It has to go optical to electric, then back to optical again. And Google's done away with all of that. And it is, I think we talked about it. It's Project Apollo. We talked about it when they launched it 2 years ago.
Yeah.
From an engineering perspective, it's kind of a holy grail. It's really impressive. I think from a deployment operations perspective, it's very, very hard to do that. And Google's able to do it because they control all of it.
Right.
And I don't think anyone else is going to be able to go down that path. Most people, what we're talking about optical is co-packaged optics, where you're bringing the optical much closer to the actual compute, and there's fewer intermediary chips, and it becomes more of a packaging exercise. And Nvidia and Broadcom both have pretty advanced solutions here, right? And they're the ones who are going to be dictating the timing. And then Marvell, I think what Marvell was demonstrating is that they have a lot of the pieces necessary to be competitive, but they still need a few more, which is why they bought Celestial.
Yeah.
Right. But I don't think anyone's going to go down the Google path anytime soon.
Right. Hence my point that it's highly specialized if you can, and that's in limited capacities, not even being able to do an almost 10,000 pod cluster like they did. So, but I think you make good points in terms of how hard the approach is, which is again why I'm like, I get a little bit weirded out by it's not, I just don't think it's a merchant thing. I think we're talking about deep customization by vendor. Once they move to optical or co-packaged optics in any capacity, it's going to be a very, very specialized solution for their rack builds, unlike somebody else's, right? And that's good, right? Because then you're looking at custom content per and whoever that is. But you're right. I think Marvell was, essentially saying they're going to need more assets here to go forward. So. Yeah, like I said, it was a good day. I don't think it changed any of the shape of the concerns or lumpiness around, Marvell's custom. There was obviously not a ton of customer conversations there. I think there's optimism that they'll begin to do more of the front side design with future customers, not Amazon, but future customers. So, as we talked about after earnings, so we'll see. It's interesting, but again. Good shape, and also, it's good to see those pieces come together. But it's not. That's none of that we're talking about is a 2026 story. It's still a custom logic XPU story in 26 at least, which trickles us into Broadcom, because that was some very interesting things that happened. We got a Hawk 10 moment that was a little more disappointing. I really look forward to our Hawk 10 moments because he's energetic and he's sometimes a little bit spicy, which I like. And I don't know, this one was interesting. The stock has not done well since then, which we can talk about. But I'll let you. I have a couple things I think were the sensitivities, but I'll let you start with the overall take of earnings.
So Broadcom reported earnings, and I think most people would agree that the fundamental numbers looked good. This is another situation similar to Marvell, the other direction, where the after hours trading initially said everything was good, right? The numbers were good, the guidance was good, all above expectations, above consensus. And then something that was said on the call just spooked people, and the stock reversed itself after hours and was down and remains down. And Marvell went the other direction, but same sort of weird phenomenon. And I think I think a big part of it was just what you said, is that Hawk was noticeably low on energy. I think he had a cold. I think he had pneumonia personally, right? And my joke has been that 74-year-old man gets a cold and the whole global economy collapses. Because there's definitely an element of that.
Yeah.
The whole, I mean, because it sort of wrecked the AI trade ever since. But and also at the same time, Oracle was reporting, and their numbers disappointed people too, and in a bigger way. So all of a sudden, there was fear in the street, and I think the concern is with Broadcom that they're going to lose share next year to MediaTek at Google. And they got asked that question 17 different ways and didn't really push back that successfully. And I think some of that just goes down to whatever's going on with Hawk. So, I mean, this is like Alchip is to Marvell what MediaTek now is to Broadcom. And, all the things we say about Marvell's custom silicon business being lumpy, you're dependent on every product win, every cycle. that's a hard business to be in. In fairness, we have to say the same thing about Broadcom. Next year, they're talking about, was it 60+% of revenue for the whole company is going to come from AI related trade. Now, not all of that is custom silicon, but that's sort of the foundation of it all. And if it can be lumpy for Marvell, it can be lumpy for Broadcom too. And so there's worry about how this shakes out for Broadcom in the custom business.
Yeah, and I think so. The other thing I think happened was, they talked about their backlog. What was that? Like 75 billion, I think, of backlog. And it was a little bit like I kept hearing chatter on like, we're not sure how to really model this then, right? It looks like growth. I don't think anybody's disagreeing that they will have growth quarter over quarter, year over year. The question though is like, how much growth? Is it single digits? Is it going to be, multiple double digits? And that became very unclear, and now call it a very fuzzy / blurry exercise. So that's one. The shape of the TAM, I don't think per Hawk's last time scolding of, I don't know who it was, either Harlan or somebody, like, stop talking about Sam, please. Nobody talked about Sam this quarter at all, which was entertaining. But yeah, I don't think anybody's still arguing there's a large TAM here that there's going to get upwards the vast majority of. But the modeling kind of became, I think, unclear as an exercise as to how much is going there. The other one, obviously, I think hit was, and I'll be curious your perspective of this, because they tried to explain the margin part of this, because margins are coming down. There's a bit about HBM pass through in terms of cost, which Nvidia has to deal with too, but it is still preserving margins. But it doesn't seem like people loved they understood the dynamic and the explanation for kind of the margin number to come down slightly, but that, I think people were very uncomfortable with that. And then again, I think the last one was the concentration of one customer, which the risk you brought up of MediaTek is that, right, to Google, with the concentration of one customer being 90% of their, custom silicon revenue. I don't think that's a short-term risk. It's definitely more of a long-term risk if that's a question. But you could tell people, they're waking up to that reality, right? Your primary driver of this revenue is Google. What happens if Google changes their mind? And this question of customer untooling, which we talked about last week, came up. And unfortunately, I don't think Hawk did a good job answering that question, because he basically said like, oh, I don't think that's going to happen, or that's not going to be a thing, completely disregarding that that's a thing for Amazon. And it's unreasonable of a position to take that if Amazon can do it, Google can't, or Microsoft can't, or OpenAI can't someday. Like, that's just not, you can't hold that position with conviction. So I don't think people liked his kind of willy-nilly, I just don't think that's going to happen, when it's probably going to happen. And Broadcom's going to have to figure out how to adjust themselves in that kind of reality as more customers do customer own tooling. So I think that part hurt as well, because he really answered a couple questions poorly, and that one in particular stuck out to me.
Yeah, I mean, that's the root of it, is custom. Custom is a fickle business, and there's always this tension. Your customers are saying, well, what are you doing for me? And I think part of the issue too is that there's a poor understanding of what it is exactly that Broadcom does in this business, and
yes,
it's changed a lot over the years, and I don't think there's a good grasp of what's defensible here. What are Broadcom's moats? Right, we talk a little bit about things like SerDes and other IP blocks that they do. Is there a way around that? There's always a way around everything. This is engineering. Broadcom is very good at it, but there are a lot of people asking, like, why should Google give up a fair amount of margin? It's a fair amount of expense for them.
Yep.
To Broadcom. And I'll tell the other thing I've noticed is the street is somewhat bipolar in its response to Broadcom's business. It's custom, it's AI opportunity. Because if you go back a year ago, It was the December call last year where Hawk first talked about how big they're operating. First time he put a number on it, and it was the first time the street woke up to the fact that Broadcom's in AI too, and the stock was up like 20% after hours, or no, like the next day it was up huge. And then like 2 months later, we had DeepSeek, and everyone sort of gave up on AI. Like, it's over, and Broadcom stock was down 20%. And then, what was it 2 quarters ago? He said, we actually have two. We have this. He again put a number to it. It was a bigger number than people expected, and he said there's more customers coming, and the stock was up 20%. And now here we are 2 quarters later, and he didn't really announce any. There wasn't a sixth or a seventh customer. And the stock's down. I mean, it's just these big swings back and forth speaks to, I think, a fair amount of uncertainty, unclear opaqueness to the business. Which, even if it were super strong, it would be hard for them to communicate it and hard for them to demonstrate it.
Right. And I think you couple everything that you just said with, what I hear a lot from investor friendlies is that people are just really sensitive to their valuation. It's like they feel like there is a lot baked into this valuation right now. And within that, right, anything that spooks some certainty or speaks to a question they've had about, like, are they actually really trading it at too high of a multiple given their growth, right, comes back into their minds. Which is a reasonable position to hold, right? There's a lot of people who I think are still skeptical of whether or not it's overvalued for the actual growth potential they have. But to your point, like, it's been interesting because Hawk has also continually reminded people that while this is a big business, he does keep saying there's really only a couple customers for us who do this, right? And he names the Frontier Labs. Like, he's clear. It's a handful of people. Okay, we get it. That's also a very large number we're talking about, right? 60, 70, 80 billion in TAM, your $75 billion backlog, which again, Jensen's popular counter argument is always going to be, well, that might not all scale. And that's true, but most of it probably will, at least to some capacity. So yeah, there's growth there. But again, back to the first point, it's hard to model. It's hard to model when there's uneasiness and there's already a concern that they might be already overvalued, which I agree is a fair concern.
So I'm not going to speak to the valuation, but I will agree that modeling this is tricky, and in part because we're moving away from selling chips to a world in which we're selling servers or services even. Right. And for some companies, I can build a model that says, all right, this is how many units they're going to ship and this is the price they're going to ship. Right. You can do that. It's getting very hard to do that for Nvidia, Marvell, Broadcom. It's getting tricky, and it's going to get harder for AMD too, because what's included in the server cost? You're selling a system now. What are you selling? What are the prices of all those different components? Like, we can do teardowns of those, or we can do models of all those, but it's in a lot of these things there's these complex business arrangements where somebody's building a server, who's actually charging for that. It's very confusing, and I think that it is in a particular problem for Broadcom, because they're offering a lot more than just the silicon back end services, the custom silicon. They have this networking thing too, and I think that's something that people always sort of forget about with Broadcom is they're the ultimate networking company. Like, original Broadcom was the best networking company ever, and they still have a lot of that expertise. And so when it comes to designing a whole server, a whole system, Broadcom's really good at this, right? They're the ones who can really go after and breach Nvidia's networking lead with Mellanox and NVLink. Broadcom has a really strong counter to that. It's a little bit further out, sort of these Ethernet alternatives, but they're Broadcom's incredibly formidable on this front. But how do you model that? Like, how do you because it's like Broadcom. I think in a lot of cases, Broadcom's going to collect some amount of money from the actual TPU chip. They'll collect a royalty on that, They'll collect some services fees. They'll sell a chip to the ODM who's putting the whole thing together. Like, that's a very different set of math than Nvidia, where you can sort of price out all the components because Nvidia is selling the whole thing, and it makes it tricky to compare. And then I think this also leads to the other important issue, which is memory, right? Because as we all know, AI is memory intensive. It's high bandwidth memory. HBM is probably the most important component, the most bottlenecked component in an AI compute load, and everybody sort of deals with it differently. There's this narrative on the street now, which is that we're in an immense shortage of memory, right? Spot prices are going way up. There's lots of fear on the street about the price of memory. And so, those were really coming to a head last week when Broadcom reported. It also gets complicated because Nvidia sells memory and marks it up, right? They buy memory from Micron and they apply their own margin to it.
Yeah.
AMD can't do that. Broadcom did, and it doesn't sound like they're going to anymore. It's a little bit unclear. I mean, that's a great business. You're marking up somebody else's product.
Yeah.
It's very high margin stuff. So it's very complicated to figure out what's the number to put for Broadcom's revenue going forward.
Yeah. No, agree. And I think that's the part. The other part of this I thought was interesting, which we pointed out, was this may not be the first time this happened, but it's certainly the first time in recent memory where, like, all of a sudden he's name dropping customers. Like, this was not a customer number one, as it's like, and we're doing this for Google, and then we're doing this for Anthropic, and like, it was just crazy how there was no hiding of other companies do. Customer number one, customer number two. It was just name dropping, which was a fascinating dynamic. But it's interesting what Anthropic has come up to this, because you pointed out exactly like I was saying too, these Google racks, these TPU racks are super, super custom. And it appears that this number that Anthropic is bringing to the table is Anthropic racks. Like, yes, they're either TPUs or a variant of the TPU. But these are also full racks. So, like, they're doing something of their own kind of cluster, which I think is interesting for Anthropic. But yeah, I mean, I think the dynamic here around the customers is fascinating, because you're just getting a little bit more clarity around kind of who's doing what, which is helpful and interesting. But I would not have expected that, right? Because very rarely do anybody get the right to just talk about their customers like that. It's usually very hidden and disguised, and they were just out there name dropping left and right, which was good.
Yeah, it was noticeable. And I know this is something I know you care about, is like all of these companies involved in this it's very hard for them to talk about their customers. And the fact that Hawk actually just flat out said Google, named the customer, and then named Anthropic is pretty notable. And I suspect that the Broadcom team thought that would be a pretty powerful thing that people would notice.
Mm-hmm.
But it didn't quite land that way, because we all knew it was Google anyway.
Right. Yeah, everybody worked out those bits. Yeah, I mean, and I'll just, on the closing up Broadcom's earnings, it was like, there's a lot of interesting stuff in this business. Then the rest of the business, the non-semi business, was just like, like,
yeah,
it's meh.
Yeah.
Okay, fine.
Yeah, right, because the other part of their business, the semi business, they have a lot of networking stuff, but those trends aren't great beyond AI right now. They sell a lot to Apple and the iPhone, but we're now going into a seasonal.
Mm-hmm.
We're past the peak for next quarter. Will be off, down sequentially, because it'll be, Christmas will be over. And then there's the software business, which is doing fine. It used to be a thing that people cared about, but it's not growing the way that the other side of the business is. Right. But I think if we get past that, I think there's this sort of root argument of, which is like, how much staying power does custom silicon have versus merchant? Like, it's really, we I think everybody goes back and forth on this a lot, and I think that it's the heart of this debate is like, how long is custom going to be a thing? How long will it be out there? Jensen makes some very, very strong arguments about why merchant is going to always win. Those aren't quite 100% accurate, but he's very persuasive. And I think this was the week where everyone just decided to be afraid of custom and afraid of the future of custom. And I don't think it's anywhere near settled. But
No.
people are freaking out about it this week.
Yeah. So lastly, I just think this is interesting. We're at the end of the year, and most people, let me just click through it real fast and look, but most people in the AI trade are okay year to date, right? So Nvidia's up as of right now, the middle of December, 27%, Apple's 12%. That's not amazing. AMD 72%, Marvell, unfortunately, negative 25%. That was not great. Broadcom 46%. I'm not going to put Intel in the AI trade yet, but Intel had a good year, 85%. TSMC 42%. So like compared to last year, where a handful of those stocks that we just talked about were like between 120% and 170%. I wonder if this is kind of like cooling down a little bit. I'm not going to say the AI trade's over, right? But we had an episode last year which was like peak Nvidia, and the concept was not necessarily that it's peak Nvidia. It's just that so much gets priced in, so much gets built into the upside that it's really hard to kind of move the stock. And then now we look at this, and there's not just that so much is priced in. I would actually argue that now is the end of 2025. There's actually a lot more sensitivity. I'm not going to say capital is completely freaked out yet, but there's a heightened awareness of capital to concern if certain things show a different way, right? That'll freak them out. And so there's a different dynamic. And so I just wonder, like, not that the AI trade is over. I mean, I think we can continue to expect growth from this sector, but maybe it's cooled a bit. You know what I mean? In terms of cooling-ish, right? Anyway, that was what I'm sorry. That was my end sort of. You obviously agree because I can see your face for those who. But yeah. Give me your read on that, like the state of the AI trade.
So I think it's reasonable to assume that I am somewhat cautious and skeptical about the state of AI spending.
Yes.
I think the issue is the numbers have gotten so big. Like they've gotten so big. How does everybody keep this going? And yeah. I mean, I sort of mean beyond the sort of, like, I don't want to get into like what are the use cases and what are the revenue, like
yeah.
Right. It's just like even before that, it's just like the raw numbers for some of these data centers, a gigawatt of capacity, and they're now, I don't know, 20 gigawatts supposed to come online in the next 2-3 years, whatever the numbers are. I mean, it's trillions of dollars. It's just like, where's that money going to come from? And we need that money to keep coming in order to pay for all the chips. And I think people are just starting to ask realistic questions about this. And I think that was the big issue with Oracle's numbers, was they are encountering delays, right, with Abilene, Stargate. And it's a massive project. So of course there are going to be delays. It's a complicated thing. And so people get, I think it's just the numbers have gotten so big and the timing has gotten so tight that there is a reasonable degree of skepticism on the street about, like, how do we really think about these deals? It can't be smooth up and to the right forever. There has to be some pauses, some hiccups. Who's going to encounter those,
right,
and what will the impacts be?
Right. Yeah.
And that's especially true now that everyone's taking on debt, because your data center gets delayed 6 months. Okay, you still got to make your interest payments. And I know it's more complicated than that. Anybody listening wants to tell me about DDTLs, but still, like, you still got to make those payments in a way that can get, regardless of what happens out in the desert.
Out in the desert, yeah. But anyway, I just say, compared to last year, where it was kind of like okay, everything that just happened seemed relatively unbelievable. Like we're shocked at just the sheer volume. Um, but yet we kind of believe the numbers has sort of been like, I'd say the first half of 26. Then capital started being like, holy crap, that's a lot of big numbers. How are we going to pay for the numbers, like you said? And now I just kind of feel like as we close this year out, not to inflate the bubble narrative, but like that wasn't there last year, right? Like this is now we might want to be keeping a closer eye on this. And so there's concern. And so that concern, I think more often than not, again, to the case of Broadcom, which had its issues, but still, I think, it will grow next year. You saw people kind of the capital be sensitive to that. And I think you're just going to see a lot more drawdowns with concerns of sensitivity than so many of these 10 to 15% things that are up, despite the randomness that happened to Oracle, where it jumped and then it shot down. And now we're all still trying to figure out what the heck is actually Oracle in this conversation. But yeah, I'm just saying, as we wrap this year, I think there's a different dynamic than kind of the last 2 years where it was up and to the right, and now I think there's more sensitivity, I guess, and more caution than probably prior times past where we've talked about this holistically on the podcast.
Yeah, I agree.
And I'm not trying to jump in the curmudgeon boat with Jay, but I am just pointing out Ben sees the sensitivity to capital as well that's happening, and it's worth the observation. So, all right, well, it is toward the end of the year. We have a couple of episodes left as we get toward the holidays, so we will talk to you guys then. We've got some good guests we'll close the year out with, and should be some good conversations going deep, and then off to the new year. So we look forward to talking to you all next week, and we'll talk to you then.
Thanks, everybody. Tell your friends.